Why, hello there, my friends. It's Chris Marcus from Arcadia Economics with the very, very handsome and debonair Andy Schectman live at the Rule Symposium in Boca.
Where's the answer? Oh, you meant you.
That's always my favorite.
Well, anyway, that was Andrew giving our introduction and welcome on in. We have live broadcast today, which you've been requesting for a while, and we're here at the Rule Symposium, where Andrew had a nice speaking lunch on behalf of Miles Franklin and plenty to talk about today. As you're probably aware, for those watching live, this is a live call and we'll be taking questions. So feel free to don't start writing them in just yet, but lot to discuss and hope everyone is doing well out there. And Andrew, a lot to dig into today.
Let's do it.
In particular, that we have China second month in a row that they reported no additional gold holdings. I know you had some comments on that at lunch.
Yep.
But why don't we start there and share any thoughts on that? Or actually, before we get to that, real quick, some thoughts on the conference. Anything there you would like to share?
I love the conference. I mean, this conference and Jay Martin's conference, Vancouver Resource Investment Conference, are the two that I'd never miss. It's a great culmination of thought leaders in the space and everything from mining shares to geopolitical events, guys like James Rickards and Bill Bonner and Rick Rule, all the way down to the mining execs. And I don't know, I think it's important to gather together with people who look at the world in a similar view. Even if we don't all agree the same, it's just nice to talk to a bunch of people at once, face to face, instead of a computer screen, where you get a little feedback, if you will, and validation that maybe you're not crazy after all. So yeah, I love it. And I would strongly suggest that this and VRIC in January in Vancouver, that would be the two that people would consider attending.
All right. And one last thought on that. You and I have talked about this a bit over the past couple months. Certainly a good show here. I would say that gold and silver mania is, again, being at a show in person would match what we've been saying online, where you've had China and the East and central banks buying gold, but has really not yet hit.
Yeah.
We're not seeing people walking around like Bitcoiners
Right.
just yet. So even with the price rally that we've seen so far, and with that said, we will dig into today's top story here, which is about China and their gold. And as I mentioned before, we had 18 months in a row where they reported increased holdings. Now we found out yesterday, second month in a row where they at least report no additional holdings. And perhaps if you have any thoughts, we could start there and see what you're thinking about that.
I think it's crap. I mean, look, as I said before, first of all, let's start with the United States. When was the last time we updated and audited our gold holdings, the Treasury or Fort Knox? I believe it was 1953. We haven't reported or done anything to clarify just how much gold is there, even at the behest of Ron Paul, who was voted down, yes, by Congress. I don't know who voted him down, but they never did allow the audit to happen. Why would it be in the vested interest of a country like China to tell us the truth? You know, they tell us they only have about 2,600 metric tons of gold, yet since 2000, at least, they've been producing anywhere between 400 and 500 metric tons a year, even call it 200 metric tons a year. The numbers would be extraordinarily higher than what they are. And my entire career, Chris, everyone would always say that the Chinese are very much not forthright with how much gold they accumulate. In fact, their numbers would stay around 1,200 metric tons forever, and they would never update them. And I think it would be in their vested interest to keep that close to the vest. And I think it's phooey. Aside from that, you know, much of the gold could be accumulated by their state-owned proxy banks that would then, at the behest of the PBOC, accumulate metal, not be forthright about it, not report it to the IMF, deal directly with the refineries in South Africa and Switzerland, not report that to the IMF. Why would they? And if they realize that just by lip service, just by saying that, they can knock the price down and subsidize their future purchases, it would be in their vested interest. And if someday, as the head of the Dutch National Bank talks about, we see a gold revaluation, oh, look at how much gold we actually have. And here it is, come and audit it. And now it's revalued to a much higher level. So just like it doesn't do any good to talk about the trades that these institutions are making to crowd themselves out as people are gobbling up information at the speed of sound. Why would they want to tell us that this is our primary objective, to accumulate all the gold? So no, I don't believe it. I think it's nothing but conjecture. I don't care who's saying it. I think it's propaganda. I don't think they've stopped buying gold. In fact, they're probably increasing it, just not running it through state channels that report it to the IMF. I have no proof of that, but that's my feeling.
Well, there you have it. And I'll mention what Vince Lancy had suggested last month when report came out of the first month of halting purchases. And his view was that they were giving some of the other countries a chance to increase their gold holdings, perhaps before pushing the price higher. Again, I suppose there's no official confirmation on that, although I will mention something I've been looking at in Gold Charts R Us. Again, a lot of gold produced in China, which does not leave the country. And here, this is adding domestic gold production plus withdrawals from the SGE. We see close to 35,000 tons since the, I guess this is marking between 1980. Even going back to 2000, it was still close to 30,000 tons, which is not to say that the government is holding all of that, but certainly reasonable to believe there's a large chunk in there. And Andy, you also mentioned the Netherlands, and we had an interesting comment here. Article was in Dutch, which we won't ask people to translate, but I'll give you the quote. Another Dutch central banker saying, gold is the ultimate reserve. If the entire financial system were to get into trouble and nothing would be of value anymore, then the gold is still worth a lot of money. We can start over with that. Interesting comment along the lines of what you just touched on. And
he said that a while ago. I remember talking about that several months ago.
Well, this was a different one. This was a new one as opposed to the other guy who talked about the possibility of revaluation.
I've heard that before, and there are a few others. They talk about that. If everything goes to hell, at least we have our gold. We can start over. I'm pretty sure this is an older comment, but regardless, the point is that they understand what it is. It's wealth outside the system. And, Alistair McLeod, coincidentally, will tell you that he believes that China has 38,000 metric tons, very similar to what you're saying. And to your point, he believes that 18,000 perhaps is in the hands of the people, 20 in the hands of the state. Whatever it is, I'll just simply say the numbers are, in my mind, are way understated, and it wouldn't behoove them or any other sovereign nation, including the United States, to be forthright about how much they have.
Fair enough. And I will mention that we're at that point of the call. If people want to start typing in questions in the chat window, go ahead and do so, and we will check back on those in a minute. Although another thing that I wanted to pass by on some banking and Fed news, take a quick look through these and then check back for any questions that come in. Here we had Vince Lancy reported this yesterday. Citi drops rate cut bomb. Basically, they were saying, together with recent data, suggest a first rate cut, very likely in September. I think it's up to about 75% in September as of yesterday. But here's the key one. A continued softening of activity will provoke cuts at each of the subsequent 7 Fed meetings. So Citi going out saying 8 rate cuts coming. Again, I'll mention that we heard a similar statement at the beginning of the year, and things get pushed back sometimes. Although I think the data is heading to a different place now. CPI later this week will give another clue there. But Andrew, are we getting closer to the rate cuts, do you think?
Yeah, I mean, maybe. I mean, everyone's expecting it into the election. It's very politicized at that point. I mean, if they were going to do it, you could argue they should have already done it. But ultimately, I don't think it changes very much. I think the long end of the bond market ultimately marches higher. And when you're talking about 25 basis point rate cuts, while the effect is not really substantial, I think the perception is, and that the perception is that the Fed will never normalize their balance sheet, that they will choose austerity well after they do inflation, that inflation will be the way that they try and get their way out of this mess of $1 trillion in debt every 100 days. You can add more to that now. That's $100,000 a second. You can add more to that now if they lower rates, and it just will reignite the inflation engine, by which we're lied to as to what those levels truly are anyway. So it's just a game, and it doesn't mean a whole lot. If they really wanted to do something about it, fine, drop rates 100 basis points, not 25. Do it all at once. but they're not going to do that. This is all politicized and nonsense, and in the end, won't do anything but continue to diminish our reputation on the world stage, in my opinion.
Righty. And let's pull up one more quick note, and then I do see some questions coming in, and we will start getting to those. So continue sending them in, but thought people would appreciate this one. As you may have heard, Rafi was reading a book about Benjamin Roth's Diary from the Great Depression, and I picked up a copy of that. First couple of pages, I thought this was special. Back in May of 1933, in the heart of the Great Depression, Senate was investigating private banking, and in particular, JP Morgan was on the witness stand, and the evidence shows the firm has made loans to many men now prominent in public affairs. So getting a little heat back then. Also, the banking sector, here we see Goldman Sachs failed a Fed stress test, and Pam and Russ Martin from Wall Street on Parade were mentioning how the Fed and the FDIC was looking at their plan to wind down derivatives if that becomes an issue. And JP Morgan, Citigroup, Bank of America, and Goldman faulted on shortcomings and how they plan to wind things down. And also, regulators acknowledge JP Morgan as the riskiest bank in the US. So, Andy, just any thoughts on what we're seeing as in the banking sector before we get to the
I find it ironic because that's the way that everyone thought forever, Chris. Get away from those systemic banks that are massively over leveraged, that carry, trillions and trillions of dollars worth of derivatives amongst them, and move to the regional banks. And now we see that the regional banks are the ones that are upside down in terms of their over leverage and their under capitalization, with the reserve ratio down to zero. That they were the banks that got blown up. Those are the banks that are not too big to fail. Those are the banks that hold the majority of the commercial real estate and the small business loans. Those are the banks that are in trouble. And as everyone has been chasing yield, moving into money markets and short-term treasuries, they've gone back into the big banks. And if indeed that were the case, where we see one of these big banks fail as a result, it ignites a fuse of panic that this country has never seen. I hope it doesn't happen, but yeah, all of these banks are really, when you look at it, not in a good position to weather a massive uptick in interest rates. I can understand why they want to lower rates, but yeah, when you look at the balance sheets of these banks, they're not good. And even though they're too big to fail, they're very, very precarious. And it's not only their balance sheet, it's the derivative exposure that they had. That's why we had to bail out AIG way back when, because AIG issued the reinsurance, the credit default swaps against these banks. It's if one bank fails, what happens to the rest? This is exactly why UBS had to buy Credit Suisse. Evidently, it was too systemic. What happens when one fails, who has deals with 12 others, and starts to bring everyone down? This is the chain reaction that I think would be very, very concerning and very frightening. Quite frankly, I'm surprised to hear them say that they indeed did fail the stress test. I would think they would keep that quiet more than anything. But it's an indictment of the system. This is why you're hearing them talk of lowering interest rates, albeit only 25 basis points is what they're expecting. I guess that's what you have to do in a system that is as sick as this is.
Yeah, and as the old saying goes, I'm sure Janet will know what to do and has that under control, and it won't be transitory at all. But with that said, we do have some questions coming in, and feel free to keep sending them in. But we'll take the first one from Niels Han Dynasty. And Andrew, he asked, is not money based on faith in the currency?
Yeah, it is. I mean, and that's even what Putin said in his speech in St. Petersburg recently, that Bretton Woods system is dead and the dollar is backed by nothing but the perceived confidence and faith in the dollar. You talk about faith and credit of the U.S. system. The credit is upside down. We're nearly 130% debt to GDP. We're very much indebted, nearly 200 trillion in debt. And when you talk about the faith, what faith do you have in a system that weaponizes and outright steals Russian assets? And so when you talk about faith, I don't know what faith there is in the system, and that's what he's getting at. That's a scary thing. And that's why I think we're seeing all of these central banks accumulate gold. And that fabulous interview that you did a few weeks ago, and really opened my eyes to, I had known a lot about Enbridge, but not a lot about the unit. And I've dug deep into it. And I believe indeed, this is the reason why all of these countries are accumulating gold and repatriating it, because it will be part of a new system. It will be pegged to a new system, which will eliminate the need for faith. And you know, you only get one chance when you ruin credibility and trust and faith. It's almost impossible to put back together. It's like smashing a glass against the wall. How do you put it back together? I don't know that we can. So I think that is true. It is about the faith, and faith that arguably has been squandered.
Yeah, it reminds me a little bit of Jim Rogers' quote when I did an interview with him a few years ago. And he, one point, said, when people lose faith in government, they always turn to gold and silver. I don't think we've seen that in the US yet, although I think there's a degree to which we are seeing that in other parts of the world. In fact, before we get to the next question, I would like to briefly pull up a few data points here, because here we have Tanzania buys gold in a new move to bolster foreign currency. We saw Nigeria repatriating gold last week, Zimbabwe going to a gold-backed currency. So yes, I think we are seeing that too.
And what is gold but the only other tier one reserve asset? And so, yeah, it is. We are seeing it. And there's been almost 30 banks that have brought their gold back from the New York Fed and the Bank of England recently. The biggest being, of course, India, who bought 1.5 times the amount of gold in 2024. They bought 1.5 times the amount of gold in the first 4 months of this year than they did all of last year, and repatriated it along with 100 metric tons held at the Bank of England. And you mentioned Saudi Arabia and Egypt and all of these African countries repatriating from the New York Fed, which gives access to COMEX, and the Bank of England, which gives access to the LBMA. They don't care that they have access to these hubs of easy trading. They would rather remove the counterparty risk and bring it home. I think that's a great point.
All righty. And the next question we have coming in here from Therand 1984. Andy, how big a percentage does the arbitrage between Shanghai and COMEX have to go before we have issues on the COMEX? I have talked to Vince Lancy about that. He felt that with shipping, even at the $4, was still not enough to make it profitable. Do you happen to have any particular insight or into that?
No, I do not. I do not have insight into that. Vince would know, perhaps, as that was his background. But I will say it's certainly interesting. I mean, I would think it wouldn't cost $4 an ounce to ship silver across the ocean. I'm not sure on that, of course, but I would be surprised if it indeed was $4 an ounce. I would think it would still be profitable, but how high does it need to go? I don't know. It started out at closer to 2, and then 2.5, then 3, then 3.5, now 4. What if we wake up one morning and silver's priced at $80 an ounce or $100 an ounce? Would that be enough? And I think indeed you will see a drive to revalue these assets, these commodities. And to what level, I don't know, but I would think $4 is pretty enticing. And as someone who shipped silver and gold around the world, I would be shocked if $4 is what it would cost to ship each ounce. I mean, from here to Canada, it's a whole different story, but you're still going by air most of the time. It's a lot less than that. So I guess we'll have to see ultimately, but I would think that 4 would still be enticing. Move it up to 8, 9, 10, 12, and all of a sudden there won't be an ounce left that isn't nailed down to the floor in any of the Western vaults.
Well, we will certainly keep an eye on that. Has been around $4. Was high last August, September, then came back in for a while before expanding back out again. So good question there. And I just saw a BRICS question pop in here, which I am going to try and find again.
Chris is still young enough to be able to read this stuff without readers on. I can't see squat, so
There we
you can.
There we go. Darren Smith asking, Andy, is the unit backed 40% by gold, and what does it mean for the price? If I could hop in for a second there, or why don't you take it away while
I'd like to hear your take. I'm happy to answer it too. But...
Well, yes, the unit white paper calls for 40% gold backing, 60% basket of the BRICS countries' currencies. And actually did talk with Matt Riley this morning about that. And great Twitter feed because he's been posting a lot of updates, including this one, which perhaps will be a good guide in answering that question. As you can see here, it's in Russian without an automatic translate to English feature. So I guess we'll just have to skip that unless I went to Google Translate yesterday and have it here. I'll read the bolded parts, which are the highlights, and then you can factor that into your answer. And hopefully this will provide some clarity to the underlying question. But again, to point out, this is coming from Sputnik, which is where Pepe Escobar articles were posted. So this is Sputnik's version of the events. Take that as you will, but I will read the highlighted parts of what they mention. In October, at a summit in Kazan, details of the BRICS single currency will be revealed. Now, they mention which will put an end to the 80-year hegemony of the dollar in the world. I don't know if that will necessarily happen in October, but at least expressing the thinking that they have here. Here it mentions the BRICS countries are implementing a three-phase plan to create an alternative international currency. According to preliminary information, it is planned to adopt a gold standard, develop a unified payment system with the introduction of new technologies, as well as ensure the dissemination of digital currencies of the central banks. The implementation of these plans will create a new reality in the world economy where the American currency has reigned supreme since Bretton Woods. A few more notes. Gold reserves of BRICS members are constantly increasing. We've talked about that plenty. BRICS countries have been the world's largest buyers of gold since 2020. Andy, you talk about this in some of your presentations. Economic size of the BRICS is 29.5 trillion. So compared to US GDP, we're not talking about small amounts anymore. 30% of the world's gross domestic product population, we're talking about half the globe. So I guess it was one thing a couple decades ago when the US goes into Iraq or a country like that. Now we're not talking about one of the small ones. And the last part I'll read here. Experts note that the abandonment of the dollar and the introduction of national currencies into circulation is an important initial step, after which the emergence of a completely new monetary unit must follow. In such a situation, it's clear that the Bretton Woods system, which dominated the world for economy for 80 years, is coming to an end. So with that said, we'll turn it back to the question. Hopefully answered the part about the gold backing. What would that imply? I'll just pass along. I guess Matt was the one who pointed this out yet.
The price needs to be revalued according to the Dutch National Bank. If every one of these countries has been buying gold and accumulating it on their balance sheet, valued at $35 an ounce, mind you, in all of these central bank balance sheets, I think, yes, the price of gold would have to be either revalued or you would have to expand the gold market. But by seeing all of these countries bring their gold back and accumulate it in the levels that they are, I think it's massively bullish for gold. And when we talk about, to your point, the treasury reserve capacity, look, the treasury can be weaponized. Who the hell wants to hold treasuries anymore that are weaponized? And when you look at gold, it's outperformed the treasury market for 50 years. Just now, doubled the performance over the last 25 years without the risk, without the geopolitical risk, the confiscatory risk, the sanction risk. So yeah, I do think it will be incredibly bullish for gold. And I also think if you read that white paper, they talk a little bit about the fact that what will start out as a common settlement currency, this unit will turn into something valued more than just the gold value. It will have a supply-demand fundamental. And if all of a sudden we move to a system that inspires trust rather than one where they have to rely upon a government that is broke, insolvent, and going around the world and imposing their will in what is viewed as a hypocritical position, yeah, the demand for the unit could explode and it could become, as the paper describes, a unit of settlement that actually becomes worth more than the underlying assets based upon supply and demand. But to your point, yeah, the gold market will expand and will be revalued, or a combination of the both.
All righty. We have a question here from Yoho 212. Yoho, I'm not sure exactly what you mean. What do you think of Bai Zhaojun claiming 500,000 ounces of physical silver have been subsumed by China in the first half of the year? I'm not sure I'm following you there. So if you want to try and
I
type that
think I
one
know
in.
what they're saying, because I read that this morning. Basically, what he was saying, if I read it right, he was saying that delivery to the exchange is the same thing as, or the way that he put it was putting it, delivery was the same thing as taking it off the exchange, because they don't leave it there. They would have to pay fees. And that he's basically saying that we've seen that much in the way of metal come off the exchange, is the way I read it. At least I think that's what he was saying this morning. And that you're seeing this is what we've talked about now, how we've seen all this metal come off the Shanghai Gold Exchange since March. And, like massive amounts, just like it's happening on the LBMA and the COMEX. So if I'm understanding what he's saying and what Baijiang Zhu is saying, it has to do with metal being pulled off of the Shanghai Gold Exchange.
That was some excellent Mandarin
The
pronunciation
inflection at
there.
the end.
So I
Yes, thank you.
felt like I was on local ground. So I'll keep an eye out, Yoho, if that answered your question or if you want to rephrase that. One other note about Bai Xiaojun, I think I sent this to you. I was asking him a few questions and he sent a long response. One of the things he mentioned was that Xi Jinping is headed to Peru and interested in pursuing minerals deals. Actually heard from Jim Willie over the past week or so. He believes that there is efforts to put together a South American form of an OPEC-like silver cartel. We'll catch up. Looks like we'll have Jim at the end of July, so we'll find out more about that.
Love Jim. And look, Mexico is number one, China is number two, Peru is number three in terms of size of silver producers in the world. And if I'm not mistaken, China is in the process of building a very sophisticated deep water port in Peru. And you'll notice a common thread, whether it be in the Belt Road or in the BRICS. You'll see either shipping lanes, um, travel lanes that are not shipping. I don't even know how I would put it. Commerce lanes. So shipping lanes in the ocean, commerce lanes that would be by ground, or massively rich in natural resources. And Peru is number three. And if you look at all of the info coming out of Mexico, they could leapfrog pretty quick and become number two, maybe even number one. I don't know. China is supposedly number two largest producer of silver in the world, and we don't really talk about that very much. It's usually Mexico and Peru in the discussion. But the common thread in all of this, Chris, is that they're uniting with countries that can in a cooperative manner pull natural resources out of the ground and ship them across the globe in a safe manner. And that doesn't surprise me one bit at all.
Alrighty. So the next question coming in here, this is a good one from Tuscan Dawn. If you have physical, is there a place you can send it to be able to use some of the gains? Well, I'd like to add one comment in there. Certainly. I mean, you have gold and silver are money now. There's different forms. I mean, there's goldmoney.com, Kinesis, places where you can have a debit card and use a fractional amount of your ounces for regular purchases. Interestingly, I've heard that talk with people from some of those companies, and they say that despite having the debit card, usually people don't ever use it because they want to see the price of gold and silver go up first. But certainly that's one way. Obviously, if people have metals, they know they can sell them back to Miles Franklin. And certainly one of the things that I don't know is widespread here in the West, but we have a good friend in our audience. We'll call him Dr. RF. Wink, wink. He knows who he is out there. And I know he's sometimes don't want to over reveal confidentiality, but sometimes he accepts payment in silver, does a lot of bartering. And certainly I know there are other people, some more active than others, but Andy, anything you care to add to that?
I went to London a few months ago for a reason. I met with Jason Cousins, who is the chairman of Glint, and I was very impressed with what he had to say. And we have struck a strategic partnership, I guess you could call it, where Miles Franklin will represent, to a degree, Glint in in the United States, and glint is just that. It's very much the same thing. It's segregated gold held, well, it's segregated to the glint account. It's allocated gold held in Switzerland in a Brinks facility with the ability to access it on a MasterCard. And I think the reason that few people use the MasterCard, even though it's a neat thing, is because what it represents, at least now, unless laws change, and you see Representative Mooney out there trying to eliminate all federal tax, capital gains tax on precious metals, but it is a capital gains moment. When you sell gold and use your credit card to do it, you are actually creating a capital gain or a capital event, capital gain or capital loss. So that's probably the reason. And people, I think, who buy gold have a real hard time selling it. But I mean, at least it gives you options, I think, when the currency from underneath us is melting away like a snowball in July. And, I just think that looking for things to do with your gold, ask it a different way. If you accumulated any other asset, what do you do with it to use it? You have to either liquidate it or transition it into another asset class. So, I think it gives you options when potentially the rest of the world is running short on options. Having gold and silver gives you that. Certainly, we can help people if they're interested in learning more about glint. It is early in the game with that. I haven't really made much of an announcement on it, although we did agree in principle to this relationship. But in the meantime, I think it gives you options when potentially in that event, those options become few and far between. And it's been money for 5,000 years, Chris. There's always been and always will be someone who will take it for something.
I would agree with that. And Coindom has asked a question. I see it pop up there a couple of times. Wants to know, when is the moonshot? My thought on that, I think the big thing is when we see more monetary demand outside of the gold and silver crowd. Could that come from the East? Certainly. The numbers I've seen for China, at least the Silver Institute, still shows very low physical silver investment. It's another thing I've talked with Vince about, and we have wondered whether some of what is recorded as industrial demand could be overlapping on investment demand. But again, similar, and you and I talked about this a couple of weeks ago, or we've talked about today, how you've not seen outside of the gold and silver crowd in the US a wider participation. And what we had discussed before was how last 2 years, about 130 billion going into gold investment, about 6 billion going into silver investment. So some ways we're seeing the gold monetization around the globe take place again. Have not yet overtly seen that in silver. If you do have that happen, again, I would say if 10% of that gold demand was allocated to silver, you're talking about tripling the silver investment demand. 10% would add another 500 million ounces investment demand in a market that's already in a deficit. So I would say something like when that happens. Now, I guess the question, when does that happen? Two things that pop to mind to me are when we really see the next wave of inflation start to kick up. I think what we saw the last couple of years certainly opened people's eyes to see the Fed say it's transitory, get it back down, and then to see that pick back up again, which I think is a matter of time, when rather than if. I think there maybe you start to really see a change in American thinking. Add in that you have gold and silver in Costco, some of these steps add up. Or again, if you have an issue with one of the banks, or to me, the ultimate thing, perhaps even more so than directly the Fed and their currency expansion. But if we hit a point, there was one core thing that brought me into the metals and has kept me in the metals, was seeing what happened in 2008 when a large segment of debt goes bad, and then looking at what's happening with the treasury market. So I would imagine that that would be what would spark an even bigger, more significant move. Again, based on what Matt Riley and others or other things we've talked about regarding the unit. Could we be seeing something like that or the beginnings of it? Certainly possible, but well, Andy, when is the parabolic move coming?
I don't know.
Let's get a date here.
I'm glad you've stuck around since 08, Chris, because we all need you and you look at things so clearly and rationally. those are all potential places where it could trigger. When Silicon Valley Bank failed and Signature Bank failed, we added 14,000 clients in 45 days. That's 4 or 5 years worth of, or more, worth of client acquisition. Immediately, people's eyes opened and their minds were expanded. But then it was made okay and was papered over, and all the bad stuff went away. All it would take would be one crisis within the banking system that became systemic. People don't even know that bail-in legislation was written into law. All it would take is one bank to be bailed in rather than bailed out. As Rick Rule, whose conference we're attending, says, the allocation in the entire financial matrix from Joe and Jane Sixpack to the Harvard Endowment Fund is 0.5%. Move that number up to 5%, and what does it look like? I think the moonshot is inevitable based upon the massive acquisition by the central banks and the repatriation of all of these assets home away from what was once considered the safe stores of access to the world's marketplaces in the UK and in New York. And that in and of itself, to me, tells you that it doesn't matter what the price is doing today or tomorrow. They know where this is going, and that's why they are using the suppression of the Western paper markets, which are wickedly rehypothecated, in order to drain the exchanges quietly, slowly enough not to cut off their nose to spite their face, to allow them to continue to acquire at subsidized prices. And then we'll wake up one morning, probably on a Monday morning, Sunday night, where it all changes, where it's revalued, where the hammer is dropped. I don't know if it starts that way with the BRICS or the countries in the Southern Hemisphere and the East, or it happens here at home with the problems with the bank. But I do believe the inevitability of it grows by the day based upon the most well-funded and well-informed traders in the world continue to buy it at levels we've never seen. That should be all you really need to know, in my opinion.
All right. I see Coindom in there saying, give me a timeline, give me a date. I'm going to pass on that one today.
It's impossible.
Although I would say the thing with the potential of the unit would be the highest probability event that I've seen in a couple of years that could have the potential to change that. I was impacted by my initial conversation with Matt Riley, which I think was back in February. It was before the prices started to move, and was laying out a lot of what he talked about in that interview and what you and I
watched that 4 times
about.
I watched that interview 4 times. Everyone needs to watch that interview. Really, really good. I talked to Matt, smart dude. I'm sorry to interrupt you. I just want people to know that that's a massively important interview to watch. And I'm talking about it all the time now, but in reality, I really learned just about everything from him, and then dug deep into the white paper as he recommended. So really smart guy, really great interview. Everyone needs to watch
For
it.
anyone who has not seen that yet, if you go to our video page, there's Matt Riley, Rick's plan for a proposed gold-backed unit. And I guess the thing that stood out to me when I first talked with him in February, again, this was before the prices had started moving, and he was saying what he expected to happen. And on one hand, I thought that seems to make enough sense. Although people have been following gold and silver for a while, we know there's, in the past 15 years for me, longer for others like you, a lot of things like, hey, this is the big game-changing event. We heard last October or last year at the BRICS meeting. I guess last year was in August. Hearing, well, they're going to announce the currency. So we've heard a lot of things like that. And I remember asking him, saying, all right, this makes sense, but is this going to be something that comes and goes, and we still see silver at $22 and gold at 18 or 1900? And he was very adamant about it, that $2,000 was gold will not be able to accommodate this. So, which is not to say that his word is the word of God, yet as we see this develop, I think that's certainly possible that could well continue to be.
Yeah, in all the years I've known you, I've never heard you say you were impacted by something. And I was massively impacted by it as well. And, Jim Sinclair may be prophetic after all from the grave, as many years ago he said gold would hit 10,000, be pegged to a new system and never come back down. Who knows? But I will say that I think it was one of the more important videos I've watched in a very long time, enough to inspire me to watch it and take copious notes 4 times. So yeah, nice job, Matt. Really, really good.
All right. And the last question we're going to pull here is a follow-up one from Darren Smith. Andy, would Glint customers be able to buy gold and silver from Miles Franklin?
Yeah, they would be. as soon as we have all of the infrastructure set up as it is right now, they could reach out to us, send us an email, and we would be able to, at info@Miles Franklin, and would be able to send them what they would need to fund their account and get set up. It's really straightforward. I mean, in essence, you can set up an account in 5 minutes and fund it pretty dang easily and go. It's really neat. Now at this time, unfortunately, Glint doesn't offer silver, and I've asked him about that, and it's on the docket. At this time, it's only gold. Sacrilege as that is on your channel, I understand that, but silver is on the agenda. But yeah, it's a neat program. And I think that for utility, if people want to spend their gold and have the ability to do so, for me, where it really comes into play would be those people who have all of their physical and just don't want to leave money in the banking system. This would be money, if put into gold, that would be physically held in Brink, Switzerland. So you're one step removed anyway from any of the fiascos of the banking system and the systemic nature of all of these banks and the weight that they would have pulling others down with them.
Okay. And I know I said last question, although I have one more question that I think would be worthwhile for people to hear. Someone asked you at your lunch presentation about the 10 to 20% allocation that is commonly cited, or how much gold or silver should I own? I think it's a great question. It's something I think about a lot. And I mentioned this briefly, but we've been working on, as you know, a marketing campaign to reach people not as much in specifically the gold and silver crowd, but who are starting to see something might not be as advertised and are a little concerned. So I've been thinking a lot about how I would phrase the thesis to someone there. And I think a lot of the time in the gold and silver community, there's almost this all or nothing. The thing's going to collapse. I have to have all gold and silver. I've done that at times myself. Perhaps was not the best idea. And I remember in one of those Market Wizards books, they actually interviewed Jeff Yass, who is the founder of Susquehanna, where I used to work, a shop where certainly it was, you hit the single when it's there, but there's also a time to be aggressive when you have the best end and the odds are in your favor, that you go all in. So even someone who trained us in that way, he mentioned that he had talked to his father early in his investing career, and his father told him, if you're not diversifying, you're throwing away money. So bringing that back to gold and silver here, I'm hesitant often. I know you're sometimes more extreme in the way you phrase things,
Yep.
but I feel it is not perhaps my personal role to tell someone you should do this percentage or 50% or 100%. Yet taking a step back, if you think about the diversification in the world we're in, if someone had 10 to 20% in gold and silver, with the range of events, trading doesn't work in that sense where there's 100% I'm going to make a fortune here. Yet when you balance all these probabilities, geez, I think 10 to 20% in today's environment makes a lot of sense. Again, I can't give legal financial advice here, but at least that's one way of approaching it. And again, for people who think are very concerned about bank risk or different types of risk, people who saw David Webb's The Great Taking, in many cases, it's going to be higher. And I think that's more of an individual decision, but at least that's how I would lay and have been laying out some of these thoughts and how I would introduce it to someone else. And I know you had an answer at lunchtime, so maybe you could share that
the
as
way
well.
you phrased it, I would answer it differently than the way people in my lunch I would have answered, who understand what's happening. Most of the people in this country have been betrayed by a media lacking all journalistic integrity, who do nothing but divide this country and not telling us what's really happening. So therefore, people in this country, even those that are well read, just read the wrong stuff and will never get out of the way of what they don't see coming. So even if we took the position, because if you give the all or none answer to people who have never entertained this ideology, they'll just shut it off and say, yeah, right. So instead, if you were to say, yeah, 10 to 20%, by the time they get it and start to maybe do a little of their own research in a way that is, outside the mainstream that is listening to people like you, God bless you, and all the others at the show here, and people who are talking about alternative ways of thought outside the mainstream. They will come to their own conclusion that perhaps the 10 to 20% is undervalued. You know, you ask Bill Holter, to your point, he'll say, how much should we put in? He says, whatever you don't want to lose. Now, I'm not saying people should do that, but what I am saying is that along with making a 10 to 20% allocation to their portfolio, I hope it would come along with also a little due diligence outside the mainstream, which I think would open people's eyes to just how susceptible everything is right now. And like I said in the lunch, when you get late in the game for a long-standing macro trend, a long-standing macro system that we're getting towards the end, people just can't believe that this could ever happen, that there would ever be any reason to be unconventional, even though times are unconventional, to think outside the box. They've never had a reason to. They may even think they're well-read, just reading and listening to the wrong people. So I would hope that if we took that position, 10 to 20%, which would still be 2 to 4 times more than their advisors would tell them to own, that they would open their eyes and start looking at the reasons that we're talking about for owning it and make their own decisions that, geez, you know, everything else that I have in traditional assets might be more risky than I was led to believe. And maybe that transition grows on their own. But yeah, I understand what you're saying. I think it becomes counterproductive to say much more than that, to open people's eyes. They would probably just push it away.
All right. And Andy, we're about to wrap up here. Been a long but good day at the conference. Just anything on special this week for people who are interested in adding to their stack now that you can pass along?
Yes, we have junk silver $0.50 at $2.50 over spot. Those are dealer's choice. So sorry, you know, when I moved to Florida, I got allergies, man, and I'll tell you, they smack me sometimes. Eyes are watering. Yeah, thank you. And that would be dealer's choice. So it could be different kinds of $0.50, whether it be Kennedy's or Franklin's or whatnot. Then we have the 2024 Silver Eagles at $5.95 over spot, any quantity, and the backdated 1/10 ounce gold Eagles at $39 over melt value, any quantity. So, Chris, I like doing this, man. Thank you. I like doing this, Chris. I think, you know, now that we live so close together, we got to do more of these live streams rather than always speaking into a camera. And quite frankly, I think we should do it every week. I know that won't happen, but appreciate you doing it. Finally giving in to me, because it's good time.
Well, perhaps we will do that. Save me a little editing time one of these days. And Andy, before we wrap up, I know you have a fan out there watching. Can we get a bang, please? Little by little.
Oh yeah, sorry. Jake, I love you, brother. And I can't wait to see you when you come down dinner with your family and Chris. And you know what they always say, brother. Little by little, then bang.
Get a bang bang, a double.
Bang bang.
Oh, there we
All
go.
at once.
And lastly, well, 2 last notes here. Yara, would you be willing to come in here and say hello? We get requests for Yara, my beautiful sweetheart, who also helps keep our channel running and me in one piece. So Yara is here at the conference today. And Yara, do you have any thoughts on what you saw today that you'd like to pass along?
It's just so nice to be with people who understand why I'm so passionate about silver and get to have conversations with people where I'm not explaining myself, but actually learning more things from them.
Right.
And yeah, so it feels good. And being in a place where I guess I get to be myself more is pretty awesome. And getting to hang out with Chris and Andy and all of our friends here. Got to meet Tom from Palisades in person. And it's just so nice to get to meet the community. And it's nice to get to join you guys on Arcadia. It's been a while. So anyway, thanks for asking me to come say hi. And thank you guys for doing everything you do for us. And it changed my life. And I get to be here with you guys because I met them. So glad to be here with you all. And thank you guys for what you do.
And with that said, everybody watching at home, that was from Dolly Martin Silver for their Wolf Project. Everybody watching at home, we're going to be doing dinner at Korean barbecue tonight. So come on over. It's on Andy. He's got everybody covered, which was quite generous of him. And for Jake and everyone else who may be wanting to hear Andy's lunchtime speech, just would like to thank the Rule Symposium again for having us here. They do have the ability, you can see everything that happened on a live stream. I think you get coverage for a year of that. So Andy, your speech is there. And if people would like to see any of the other speakers that we had here, full list there. I'm going to put this link in the description. It's already in the description field below. I'm going to throw it in the chat here. But
Yeah.
that is up there in case anybody wants to get a closer look at what's been going on here. And Andy, I guess we'll wrap up for today, but appreciate you being here. As always, appreciate everyone who's watching at home. Thank you for making this show possible. And that said, we'll wrap up. Who knows what will happen in the next week? Yar, do you know what's going to happen in the next week in the gold and silver markets?
I need to ask Nibbles and then I'll get back to you.
All righty. Well, we'll keep you posted. Thanks for being here. Hope you had fun and got some questions answered. And we will see you again with Andy next week.